Good evening. Good evening. Good evening to all of you future millionaires out there just tuned into the show. Today we have a guest with us. And to be honest with you, we've had plenty of guests with us, but this one right here is really a special one. She's going to dive into finances and talk about Money. Yeah, we have Professor Stacy, the money teacher, on with us today. And she's going to give us a little insight into budgeting and savings and basically how we can make more of what most of us, my listeners anyway, love the most. So, Stacy, Professor Stacy, I'd like to invite you to the Millionaire by Morning show. Thanks for being with us today.
Thank you, Rashad, for having me.
I looked into your background, and it's the perfect combination. I feel like this is the perfect combination for the show. You have a background in dealing with money, in accounting. Am I correct?
Yep.
So as far as your background is concerned, is that something that you've always wanted to do? I mean, like from a child, were you the person that held on to money, counted money frequently? How did that come about?
It's funny that you asked that. So my aunt will tell a story that I think she said I was about 5 and she found me sleeping with my pocketbook under my pillow. And that's when she knew that I was going to do something with money. What she didn't realize is that I was probably sleeping with my pocketbook under my pillow because I'm one of 4 kids and my older sister used to steal my stuff. But still, I knew from pretty early on that I wanted to do something with money. And I did my undergraduate at Rutgers and earned my CPA license and did that for a while. And then I did other jobs in corporate accounting for a while. And then I decided I wanted to teach and went back, got my Ph.D. in accounting. And I've been a faculty member here at Bucknell University for 15 years now, almost 16 years. And I teach upper level accounting, but my passion, I also teach personal finance. And that's what I love. That's my sweet spot.
Okay, all right. So you are actually a professor at a school, as well as you kind of doing this on the side.
Right. A couple of years ago, I started a private coaching business. So I do financial coaching on the side. But my day job is a college professor and teaching money to 18 to 22-year-olds.
Okay, all right. So the personal finances, what is your bread and butter there? Your avatar client or average client?
Actually, with my background, I have clients in all areas. So I certainly have a heart for young people because that's what we teach at Bucknell. That's where I spend, most of my days. So I love working with, 18 to 28-year-olds who are passionate and excited and starting out their life and just need to learn about money. They're intelligent, but ignorant, unknowing about all things finances. And if we can just tune in just a couple of things when you're that young, the time value of money will make you a millionaire in no time at all. Unfortunately, most people aren't taught what to do in those early years, and you end up being 30 or 40 or 50, wishing that you had those years back in terms of saving and investing. So that's kind of the next group of people I help, are the ones that are kind of in the middle of their life, maybe starting to get kids, getting ready for school and trying to figure out, what to do in that middle season. And then the last group that I've been working with a lot more often lately are retirees. So helping retirees get a mind shift from accumulating wealth to spending wealth wisely and, in a way that will sustain them into their, last stage.
Right. Okay, understood. My crowd, I would say, my avatar would be from the ages of 35 to probably 55.
Yeah, they're deep in it.
With that age group, I would like to ask, is it too late for that age group?
Yeah, it's never too late because there's not another option, right? If you want to be successful with money, the best time to start would have been when we were 18. The next best time is today. So today is what we have. The worst time would be sometime in the future, right? So
Right.
there's different techniques that you use and different strategies that are more useful to those middle career people. But it's basically the same rules: budgeting, saving, investing, paying off debt, spending less than you make.
Okay, same rules. Um, actionable steps. Let's get into, maybe you just named them. Maybe that's exactly what you just named. Um, actionable steps. Someone sitting down with you. They have a good stable job, just not much in the bank. They don't have an emergency fund, much of an emergency fund. Um, how would you approach this situation?
Yeah, so I usually start with a client trying to figure out what do they want, right? What are their dreams? What are their goals? And it's funny because some people will talk about, I want to be able to pay my bills each month. Like, it's very short-sighted. And other people are like, I want to be able to retire and do whatever I want in the later years of my life. So everybody has different length of time that they're interested in, which is why I always start with that question. Because somebody who's talking about today, I need to be able to pay my bills today. If I try and get them to dream about 20 or 30 years from now, it's not going there, because that's not where their head is. Their head is, how do I pay the bills this week? And that's where I have to meet them. On the other hand, if I have somebody who's dreaming long term, then we can talk about that and then bring it back and be like, okay, what's stopping you today from saving for that? And now we get into the, well, I'm overspending, I have too much debt, and we come back to today, because we have to fix today in order to build towards that longer goal.
Okay.
So first is figuring out where somebody is, and then I always try and meet them there and help them vision, help them see, give them the dream and the hope that there is something more for them, because we would be masochists if we sacrificed everything today to save for the future if we didn't really believe that we could be successful in the future. That's the YOLO. You only live once, is because whatever, when I'm 40 or 50, I'm going to do this now.
Right.
You have to get somebody past that to say, yeah, but you have to believe and be hopeful that you'll become 40 or 50, in which case you're going to look back at your 30-year-old self and smack you in the head. Yeah. So it's visioning first. Then once we can get visioning done, then we can start tactical steps. So track your spending for a period of time, so you start to realize where your leakage is. Build a budget or a spending plan. If people don't like the word budget, spending plan where you're assigning every dollar of your income a job, on paper at the beginning of the month when you're calm, cool, and collected. And then the tracking comes back around to make sure that that's how you're actually spending. And in the budget, we can see, does it make sense that a single person is spending $600 a month on food? Maybe not, right? So then my experience can help somebody just understand that. Because if this is all you've ever done, maybe you don't know that $600 a month for food for a single person is actually quite a lot. And there's ways then that I can help a person maybe whittle that down a little bit. And if you can save $100 out of your food bill and you invest it, then we can run some numbers to see what would that be on a longer horizon.
Okay.
So live on less than you make a plan. Well, vision, live on less than you make a plan, and make a plan for your spending, and then a plan for your future.
I would think that the hardest part of that is getting people to visualize what that looks like. Do you get help, outside help, for that aspect of it, or are you, good enough with at least your I know it's hard to change people's mind and mindset from when they were younger. So the reason I ask is, I know a lot of the coaches that I've dealt with, they bring in a specialist, depending on like a manifestation specialist or something of that nature, to help people to kind of break that cycle. Do you can you handle that aspect of it, or do you outsource that?
I have not outsourced it to date. I have suggested, especially when I'm working with married couples, if the root of their problem is marital communication, that they would benefit from marital counseling, because I'm not a communication specialist. I can have two people and ask them to communicate with each other. But if deep-seated is a concern about being honest or about being vulnerable, I can't help you with your money until you're willing to talk to the person, sitting next to you. But mostly the visualization, the way I do it anyway, people don't struggle with that because it's really about dreaming.
Yeah.
So most people kind of do know what they're dreaming. It sometimes takes them a couple of sessions before they're willing to share it all with me.
Right. Okay.
Because when you first meet somebody, and I mean, I pepper people with questions. I ask all the questions nobody else asks. How much do you make? Where do you spend it? How much do you have saved? What do you have for retirement? Where's the last big item you paid for? What's your debt? Right? Like nobody talks about this stuff. And I boom, 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 gotta get to it. So as we break down those barriers of my being a stranger to them for all intents and purposes, people will start to open up and they might say, I want to be able to retire comfortably, but they're not going to define that for me yet. In a couple of sessions in, then maybe they'll start to define that. And it means having a house on this place or being on a cruise or whatever. So yeah, people don't usually have trouble dreaming. People have trouble communicating, especially again, if you're working with married couples, that there's a lot I'm single. So, I can only see that there's a lot in marriage that, isn't always open and hasn't always been kind to each other, especially around money.
Especially. It's a hard topic. It's a hard topic.
Yeah.
Especially two different people have two different mindsets, how they were brought up and those type of things.
Yeah.
Is embarrassment a factor? Like having a bad credit score or thinking that you should be where everyone else should be. Do you run into that? I guess that would be communication too.
Sometimes really it's more shame. People have a lot of shame around money. And sometimes clients, when I'm first starting to work with them, because they have access to me via text and phone and that between our sessions, and I'll have somebody just a couple sessions in will text me, like, I just got another bill in the mail and I can't believe that, I didn't have that on my list. And I was so stupid, and just using words directed towards themselves that you'd never let someone else say to a friend of yours, right? If somebody said that to a friend of yours, you'd stop it right away. But people say this to themselves. And by the time they say it to themselves in front of me, I know they've said it to themselves 1,000 times.
Right.
And, breaking people of that shame, because it doesn't really matter what we did in the past, right? This is where we are, and this is our plan for the future. And these are the 1, 2, 3, 4, 5 steps we're going to go to get there. And I try and infuse some pride, like even if we just make little steps, then, positive reinforcement, so that people can start to shift that I'm not good with money, or I can't be trusted with money, or I've never been able to do that, down to, heck yeah, I didn't stop at the Dunkin' Donuts this morning. I drove right past it. And it's a $3 coffee, right? But now they're like, I drove right past it. I'm going to drive past it again tomorrow. And that's the exciting part for me, is when people start to realize that they really can do this. And it will be long and hard for some people, but today's a good day to start.
It's the small wins that count. It's the small wins that get you to the big wins.
Yep.
And this week, I don't know, I'm in such alignment because everyone that has came on the show has spoke about self-doubt, self-care, self-worthiness. And that's the way that you view yourself. You just said that a person would never let their friend be talked to that way, but yet and still they talk to themselves that way. Like they see that relationship more worthy than they see themselves worthy. So when people can, pull back the curtain and kind of see themselves as worthy, that's when change begins to happen. And
and it usually happens pretty quick after that, because once somebody gets that shifted in their mind to, wait, I can do this, like, it's just behavior change. I'm not actually going to die if I don't stop at Arby's tonight, right? Like, I'm not actually gonna keel over. Like once you shift in your head, you're like, no, I drive the car where it goes. And I take out my wallet and my credit or my debit card. Like I do that, which means I can also not do that.
Yep. Yep. That's it. Exactly correct. So, okay, mindset and everything. Person is ready to begin saving. I know there's a lot of vehicles. What is the most safest step that a person can take towards savings?
Right now, a high yield savings account. So if you just Google high yield savings account, there's a whole lot of them. I will say, make sure that you only ever deposit your money in a bank that is FDIC insured, Federal Deposit Insurance Company, FDIC insured. And if you have your money in a bank that's FDIC insured and it's less than $250,000 in that bank, then should anything happen to that bank, an online bank, brick and mortar bank, it doesn't matter. Should anything happen to that bank, the government will reimburse you, usually 24 to 48 hours. And it's happened in the past. It happened, what was it, this time last year with the Silicon Valley Bank, right? So it's not like this has never been tested. It has been tested, sadly, a number of times. And each time the federal government has reimbursed the money immediately. So people should feel comfortable using high yield savings accounts. And sometimes, depending upon how population dense your area is, you may not be able to find a local bank that has a high yield savings account. Right now, high yield savings accounts are making about 4 to 5%, 4.5%. You can find that pretty easy. Just a regular savings account at your local bank, if it doesn't have a high yield savings account, you could be making 0.2%. So the difference between 0.2% per year and 4% per year is quite a bit.
Yeah.
So especially somebody who has a fully funded emergency fund, they might have $20,000 or $30,000 in an emergency fund, which by definition should be kept liquid and not invested, right? A high yield savings account, when that $20,000 is just sitting in there, could make a difference of a couple $100 a year.
Definitely.
So simply moving from a regular savings account to a high yield savings account, it's just as safe, assuming it's FDIC insured, and should be just as convenient to get at, because either you'll have an ATM or you can electronically move the funds back and forth. But that's a really good place for people to start.
Okay. Okay. I have a question I'd like to ask that I have received a ton of different answers on. And so you tell me what your opinion is.
Okay.
So life insurance, full whole life insurance with a yield, or term life insurance? Which one of those are the better option?
Term all day long.
Term
All day long.
So you can invest the rest?
Yeah. So, to me, it's about money. If you're going to be protected either way, right? And I just did this exercise recently with a client. We priced, because she was more comfortable with the idea of whole life insurance. So I said, that's fine. Let's price it. So we priced whole life insurance for, I think it was about $500,000 policy, and a term life insurance for a $500,000 policy. Same woman, in the term policy, I think, was 20 years. So maybe not her whole life, but a good long time, right? And the term life insurance policy was 15 times more expensive.
Yeah.
15 times more expensive. So we ran the numbers. And what that 15 times is, if you took that same amount of money, a couple $100 a month, and you saved it, how long would it take you to save, to have wealth be built? And the whole point of life insurance isn't to keep it your whole life. It's to become a millionaire and don't need life insurance, right? We call that self-insured. So when somebody's a millionaire, you don't need no stinking life insurance. You have money. Money. And when you die, the money will go to your heirs. So the whole idea of keeping life insurance your whole life means you never plan to be wealthy. And I just won't buy into that.
I've never heard it explained like that. Because the one way that I did hear it explained was the IUL,
Mhm.
and that was based on the fact that you can borrow money from your life insurance and that it will yield 1 to 2% yearly and never go negative, basically. Um, but I heard that that was more for people that's already, it's just kind of a tax shelter more so
Yeah,
than for regular people.
this is one of the things, like, people want to know, what do the rich people do? The problem is the tactics that the rich people are using and paying money to use is primarily to avoid taxes given their tax bracket.
Yeah.
If regular people use the same techniques, because that's what the rich people do, you're not going to get the tax benefits, but you do pay the cost. It doesn't make sense. Like, it's not act like the rich people until you're there. There are some small group of people, very wealthy people, who are worried about trusts and leaving inheritances beyond the $12,000 federal income tax exemption or federal estate tax exemption. Like, those people are looking at products. They're trying to avoid 50% taxes to their estate. You're not going to have, if you don't have 50% taxes to your $30 million estate at some point in the future, those same tools won't work for you, but they're going to cost you the same amount of money. So
Awesome.
you're better to do to model or to emulate the people who are at your life stage are a little bit better off when they were at your life stage. So ask the person, like, if you've got $200,000, ask somebody who's got $500,000, what did they do when they had $200,000? And do that.
Yeah. Yeah.
Right? And always be stepping it up as you get along further. But somebody who's paying, I don't know, hundreds of thousands of dollars to attorneys and tax people to save millions of dollars when they die, yeah, they're going to do different things than you or me.
Awesome. Awesome explanation. Never heard it put in those terms before. But yeah, definitely. I can go
I'm
for
not trying to
that.
sell you anything. That's why I put it in those terms.
Is that, yeah, I understood.
I'm not
Because
selling you nothing.
the term, people, term is the best. Whole life, oh, whole life all day.
You got that backwards. Term all day.
No, I'm saying the whole life salespeople
Oh,
are
yes.
gonna say whole life all day.
Yep.
Yeah. Um, as far as let's go with this one since everyone is an entrepreneur
Mhm.
these days. Retirement. Entrepreneurship doesn't offer 401k.
Mhm.
What can entrepreneur do knowing that you know he needs to put his money somewhere for it to he needs to put his soldiers somewhere so they can bring him some money back.
Yeah. So it really depends. Some entrepreneurs are building their wealth in their business, and at some point they're going to sell their business, harvest that gain, right? So the best place for them to put that money is in their business, right?
Okay.
All saving for retirement is just trying to find a way to let money grow with as much tax benefit as you can. And if you leave the money in the business, depending upon your corporate structure, S corp, C corp, sole proprietorship to partnership, depending upon your business structure, you can sometimes leave the tax gains in the business until you sell it at some point. But all entrepreneurs can get an appointment with a CPA and talk about the options, because if that's one, is just grow that value of your business, sell it one day for $50 million, and you're good for retirement. No worries, right?
Right.
Another way is to start retirement savings on your own for your own company. And which of the possible methods you would choose, an IRA, a SEP, a simple, really depends on your plan for your company. Do you plan for it to remain a solopreneurship? Do you plan to have it only have family members in it? Are you going to have employees, and how many employees? Because the rules of the different retirement plans that are available to for small business owners are different depending upon how you see the structure of your business.
Definitely.
So a tax guy can help somebody analyze that, like figure out what would be best, and can actually help you get it set up in the first place. So there can be retirement plans in an entrepreneur company or small business, but you wouldn't do it yourself. You would, and you don't need the CPA forever. I'm a big fan of use experts when you need an expert, have them teach you how to do it on a day-to-day basis, go do it. And when you need an expert again, come back, right? Like helping people become autonomous. I don't want any client for 20 years. That just means I didn't do a really good job of teaching them, right? So go to an expert, learn, and then, execute.
Learn and then do.
Yep. And when you need more information, when you outgrow that level of advice, then go back and ask more questions.
Got you. Okay. Let me see if I have any questions coming through. I put the word out there that you'd be on the show this evening. All right. So let's speak about your offers, what you offer, where you help people, your courses, your one-on-ones. How can people hire you?
So I have a website, Prof. Stacy the Money Teacher, and I have, I think, pretty much all the social media handles or all the social media outlets, again, with Prof. Stacy the Money Teacher. My LinkedIn is under my name, Stacy Mastrolia. And through all of that, I provide pretty regular free financial information, financial literacy information, and I sometimes do break down complex topics that are being talked about in the news for regular people. So this time last year, I did quite a bit of media and writing about what was going on with Silicon Valley Bank and why none of us should really give a hoot about it anyway. We do better to spend our time working on our business than worrying about a bunch of people out in California who, right? Because it wasn't a systemic break in the banking system the way the news was putting it out. So people can interact with any of that material. It's all offered free as offering to the public. If in doing that, people feel that they want more one-on-one help, they want somebody to look at their particular numbers or help them get their feet underneath them, I do one-on-one coaching. And again, through my website, profstacythemoneyteacher.com, you can find that connection. And I'll start with a complimentary consultation and then see if it's something that, I think I can help, and people think that they can learn and grow financially. So that's the one-on-one coaching. And then I also do group coaching, small group coaching. So you can bring the group if you have like a church group or you've got a homeschool group. I would love to do homeschool groups because get those teenagers and train them up right. I would love to do that. I have not done that yet, but I throw it out there. Any homeschool group, I would love to do that. So you can bring the group, or as it happens, I kind of collect names. And then when I feel we've got a group together, I'll launch the group to do small group coaching. The price point on that obviously is more attainable for people. So it does require, though, that you're willing to share your information in a group. You have to be comfortable with that because it's not one-on-one coaching. It's not just me asking questions or you responding to questions only to me. Everybody obviously is on the call. And I'm working on writing a book. I wrote a book earlier in my career on accounting when I was teaching first year accounting students. This is going to be a financial literacy book that is meant for intelligent but ignorant people who just don't know about taking care of their money. And yeah, so I'm working on that. It's not done yet, but.
That's awesome. Intelligent but ignorant. That is a statement that should be used more often because you can still get intelligent if you're ignorant. That's the whole point.
You just got to learn, right? Nobody ever taught you, or they tried to teach you and we were too boneheaded to listen.
Definitely.
But all of us have something we can look at in our life and say, I'm an intelligent person, but I am just ignorant about eating
Something.
right and exercising properly,
Yeah.
but that doesn't mean I can't learn. As soon as I'm motivated enough to learn, I'm sure I would learn that topic.
As well.
Yep.
That's right. That's right. Professor Stacy, the money teacher. It was awesome. I want to thank you for coming on the show today. This conversation could go a whole lot longer, but I would like for people to go to your website and sign up for the free consultation, and then they can speak with you a little further in detail themselves. So I'm going to wish you a well-to-do, and anytime I have a group, which I do have my little following, I'm going to check to see if they would like to get in the group, and we go to Professor Stacy, the money teacher, and see if we can get a group, what would we call it? Session accomplished.
Yeah. Yeah. Especially if you get like a group of entrepreneurs, that's an awesome group to talk money with, because you can talk personal finance, you can talk business finance, you can talk profitability, how do you get your company profitable and keep it profitable. Yeah, so
Yeah, definitely. The little part where I was telling you about, because I'm a marketer, and I love this podcast and speaking with different people, but I know where I'm good at and where I'm not good at. So I will outsource in no time. In a heartbeat, I'll outsource. So yeah, you're someone who has definitely passed the test. And if anyone come to me needing any of this type of information, I would definitely send them your way.
thanks, Rashad.
All
I
right.
really
Well,
enjoyed talking to you. Thank you so much.
thank you. I hope you're not nervous. That came down a little bit during the interview. As
Yeah,
you
no,
said.
no. No. I was nervous when we started, but nope.
All right.
You did good keeping me calm.
Thank you. Thank you. Glad you enjoyed it. All right.
Thanks,
Well, you have a
Rashad.
great night, and hopefully we'll speak to you soon. And I wish you much success, everything you do from here on out.
Thank you. And you as well.
All right. Have a great night.
You
Bye
too.
now.
Bye-bye.